So good afternoon. I have a very, how should I put it, interesting panel on stage. We have people who have actually created, run fintechs. We have people who have funded them, and we have people who are actually driving a lot more innovation. I guess the question is, when we talk about fintechs, and I will get us started with something completely offbeat, right? Fintech has got 7 alphabets, as you know, in the word itself. And it's quite fascinating, but over the last 20 odd years, or maybe even 25, there are 3 of these 7 alphabet words which have started changing the world, right? So digital was the first one. Then came fintech, and more recently also here all these things, discussion on climate. So I think it's quite interesting when you look at fintech along with digital and climate. These are 3 big, for want of a better word, mega trends shaping the world. As I look at it, the other question is, why are we even talking here at growth and innovation in fintechs? The reason for that is very simple. There is a lot that is changing. And change is actually very difficult for all human beings, all animals actually. So I don't know whether you know this, but if you see an elephant gets tied with a rope to a small wooden peg, and the elephant will never try to move away. Why do you think that is? That is because when the elephant was born, when the elephant was literally a week old, a month old, the elephant was tied with this rope to a wooden peg, and it tried and it could not break away. Fast forward a few years, the elephant could, as they say, even with a toe, break that peg, but the elephant looks at the rope and says, I can't get away. This is human conditioning. This is animal conditioning, right? And that's the problem with change. I could make it come alive even more, but in the interest of time, I'm going to ask you to try and take this trick on, right? Just free up your hands. Both hands. Put your hands together, just clasp them together. How many of you have your right thumb on top? Just raise your hand. How many have the right thumb on top? And how many have the left thumb on top? So not everybody raised their hand, so half and half. Now I would ask you to do the reverse. So those of you who had your right thumb on top, change all the fingers, but not only the top. Change every finger such that your left thumb is on top, and vice versa. Just try and do that. How does it feel? Uncomfortable, different, strange. It's quite remarkable, right? And it's not, you might assume it's because I'm a right-hander or a left-hander. No. When you were younger, you got used to doing things a certain way, which is either your right thumb was on top or your left was on top. And that's it. That's what you're now comfortable with. It is actually completely remarkable how difficult it is for us to change. And the reason I start with that is we now have the fintech world, which has forced all of us to change, right? The number of changes, many of you are very young, so 30 years back, there was no internet. Literally, I'm taking a poetic license 32 years back. There was no mobile phone. So I grew up in a world where I did not know what a mobile phone looked like. 20 years back, and you laugh at this, there was no T20 cricket. Right? Just 20 years back. It was literally invented or started in 2006, 2007. 10 years back, there was no UPI. Just think about it. And can any of us, is anybody in this room able to live without UPI today? It's actually only 7 or 8 years old, 7, right? Nobody spoke of fintechs as well 10 years back, more or less, right? So, and that's why we are here. That's the pace of change that is driving this world. And so with that, why don't I stop talking and get the group to start? As I look at it, right, and I'll actually get all of us to jump in. In the last 2-3 years, especially coming out of all the challenges post-COVID in the last 2 or 3 years, people have all been talking about big terms, right? Otherwise, there was the wild, wild west with innovation. But now people talk about fiscal prudence. People are beginning to talk profits, right? That was an unheard of word. People are talking about long-term sustainable differentiation, mean reverting valuations, high quality governance, building resilience. All of these things are now top of mind both for founders, for promoters, but also for people looking at this sector. Now, as you look at that and you fast forward to the next 3 to 5 years, because anything beyond that is really long term, where do you see the new frontiers of innovation? You know, where do you think you see the world really moving ahead, specifically from a fintech and an India perspective? And I guess keeping it simple, Sabyasachi, why don't I get started with you, and Rajesh, if you can go after that.
Sure. Thanks, Alpesh. I think this is a very valid subject from today's context, but I would say this is only valid subject from today's context from if there are any PEVCs in the room. But ideally, as a business person, it is always supposed to be valid from day one. You can't start a business without having a sustainable business model. You cannot think of innovation if there is no light at the end of the tunnel. That means you need to break even at a certain point. There has to be time-bound sustainability model where to start generating money to run the business itself. And I think there was a season when there was enough funds available for fintechs to do a lot of exploration without really thinking of the business model. And there was rush to raise money or rush to get the valuations right instead of focusing on the product or the product journey per se. So I would say that myth has got busted, whatever time it has taken, but for the good it has. And the focus has come back on EBITDA. So I think morning also there was a couple of conversation which was happening on no more GMB conversation, Mr. Piramal said, and it is rightfully so towards EBITDA. So I think what the key that fintechs have taught us as an ecosystem is that it can quickly disrupt. And rightfully, Alpesh, as you started with, that we are not so used to change management within the organization, as a human, and across as an ecosystem. But what it has done for the good of the citizens of the country as a nation, now people have started accepting that we are fine with experimenting and trying new things. Now the question is only, while you are trying things, are you able to monetize out of it? Like I know for sure, I mean, as a company, when we started B2C and we realized that there is no money in the B2C, honestly. Spend billions to get millions, so no ways. We switched to B2B. Not that B2B pays you enough, but still it is better than B2C, because anything on internet means we are used to get it free. You can charge something from network effect, but otherwise the product doesn't pay for itself. Now that's a myth or that's a reality for all of you to judge. So the quick point that I'm trying to say is you need to stay clear on the business model and the idea that you are working on. It shouldn't be a valuation game, which I think the industry has realized, and it is moving in the right direction. Now, coming back to the second point quickly, what are the innovations that we will see in the next couple of years? I think one thing that we have seen as a nation is quick digital transformation. Now, it has taken years. When it was first on the commerce side, it took a little longer. Then when it happened on the delivery side or logistics side, it was a little lesser. On the financial side, it is further lesser now. So people expect, when I see and when I talk to people in the industry, they say that we want a Swiggy-like experience in financial services. Now, there's a difference, because that's food delivery and this is regulated financial product. So there's a difference. While we can try to make Swiggy-like experience available for financial product, you need to operate under a certain boundary, because there is a risk involved very clearly, because it's a financial monetary transactions that's happening in some form or sorts. While this is happening, so what we are seeing recent trends. Every day you open the newspaper and you see new frauds happening, new fraud. So all of you know that fraudsters run a parallel economy as we run the economy sitting in this room. So you have to outsmart them, they try to outsmart us. But anyways, I think the fraud is something that a lot of innovation as a country we will see from the fintech ecosystem. That's what I'm saying on a positive side. The second that I believe that is happening apart from fraud is the compliance and governance. I think Governor Sir also spoke in the morning. A lot of automation from an audit standpoint, reporting standpoint, alerts will be done by the fintech's ecosystem. And when I say fintechs means fintech is not directly proportional to the lending fintechs. It is techfin as well, the technology players across. They will create a lot more solutions from fraud and compliance standpoint. That will be my top two, apart from the green one, which I'm not touching here.
So I hope Swiggy paid you enough to do their ad here. Rajesh, if you take your top 2 or 3, sort of your crystal ball gazing, what are the top 2 or 3?
He is, thanks for inviting me. He has spoken about some of them. I'll articulate in our way as a public policy institution. The fact that fintech and valuation is today talked about, you think that will be passé? Because 1 billion Indians are expected to avail digital finance in the next few years, I would say 2030. And for that to happen, a few things. One of the things in payments, Pravina is there. The UPI has taken care of payments and is getting there. Because not everybody with a smartphone currently uses UPI, but we are getting there, especially with the new products. The big innovation that is going to happen is in terms of savings. I'm sure all of you will be yawning, what is savings innovation? But do we realize that every Indian cannot save when they want, how they want, where they want? 450 million women in India cannot save how they save or how they were saving in a rice jar. So that's one. Second, credit. Yes, lot of digital lending is happening, but still only touch the surface. And the fact that the public credit stack that we have built with RBI will actually reinvent or lead to, as I always call, the UPI moment in lending in a few years from now. So as you said, there is no UPI. For credit, things will change. Third and last is if digital finance is going to be the way 1 billion plus individuals interact with finance, robust trust mechanism need to be built, whether it is fraud, and in one particular thing I want to mention is grievance redressal. So grievance redressal, I don't want to go into, the example he gave because, one of these platforms offered me I ordered pav bhaji, only pav came and no bhaji, and they said, we'll give you $20. So imagine, I got wild. So I'm saying these platforms still are no match to what you and I need in terms of grievance redressal. You have a grievance, you just tap, it will go to the digital footprint and give you the resolution instantly. That's what Gen Z, that is what millennials, that is what the next innovation in finance will be.
Shashank?
Yeah, thanks for the invitation. Rajesh sir, very well spoken. I think I truly agree with you. The innovation scope for the next half a decade or a decade, if I can say so, right? I see it on 2 different dimensions. One, a lot of innovation has happened on payments, on credit, but it mostly caters to the top 100 million to 300 million consumers in the country. So all the services that we are used to in our day-to-day life today, from banking to credit to payments to savings to investments, all of that, how do you translate it to the next billion Indians that are present in the country who are still not in the fold of the formal economy in a big way, right? So there's a lot of scope for innovation there, a lot of new models, technology, all of those applications. And the primary delivery mechanism will continue to be via internet and via mobile. A lot of the brick and mortar and those kind of scopes, they don't work at that scale. So that's going to be a big innovation scope, and we will see a lot of value created on that front. I think on the more traditional side, right, if you talk about consumers like us, or the, if I can say the top 100 million, 200 million consumers in the country, I think in the next 10 years, we'll see that the well-to-do consumer, right, they'll keep becoming more demanding. They'll want services to be a lot more personalized, a lot more efficient, a lot less patience if the incumbents, if the fintech industry doesn't deliver on its promises, and they'll quickly move on. There's no established loyalty. If your favorite fintech app or the bank doesn't promise and deliver the services that the impatient consumer needs, right? And we see that today in our conversations with a lot of, consumers as well as businesses. I talk to a lot of CFOs pre-pandemic and 5 years ago. There used to be this conversation, why should I use this software? I have a lot of people who can do the same job cheaper. But today, I think that mentality has changed. And I see that in a lot of sectors and industries and people who usually are not technology savvy by default, right? But the conversation is now, how can I automate? How can I improve my operational efficiency? How can I ensure that I have lesser people in the loop in doing all these activities? So both on the consumer and businesses side on this front, I think there's a lot of work to be done to meet the consumer expectations and needs, especially as we keep moving up the digital curve and we keep seeing more and more people having higher disposable income and higher expectation from the industry.
So, Anuradha, same question, but slightly different. Since all of us want to know where you put your money. So, if you had to pick your top 3 bets to invest in, what would those be?
Sure. Thank you, Effie, for having me here. Thank you for that great question, Alpesh. The disadvantage of being in a very, distinguished panel is that you have to, say something truly, truly smart for people to remember you. If as an investor, what we are thinking about, right, in terms of fintech, for us, it is about technology-based financial services delivery, right? But if you look at the world and if you look at how it has changed, in our third fund, there are 2 companies which are what we call technology bets that we have taken. And there are about 6 companies which are financial services companies which are tech-enabled. For us, it's now become actually par for course that everybody needs to have tech at the back end. Otherwise, there are a few metrics which don't work out. What are those metrics? Turnaround times, right? It's no longer true that you wait for forever to get an approval to get a loan sanction. People expect sanctions in seconds when it is a digital transaction. If you're buying something online, people expect a sanction within the day if it is something which is, you've applied for an occasion and want to take a loan. People expect a response within a week if it is a large home loan, right? And look at the ticket size variances. It could be somewhere 5,000 to 50,000 rupees when you're transacting online. It could be in the 3 lakh to 15 lakh bucket when you're actually looking at a sanction within the day. And it could be as large as about 50 lakhs when it is coming to actually home loan, or maybe even a crore when it comes to home loan sanctions. But everywhere, the expectation of the customer has changed. It's not that you wait forever, right, to get your response, to say to wait for your bank to say yes or no. So in that kind of a world, technology is a given. It's a given word, right? So you need to be either technology enabled at the back end, or you need to be tech first, where you're getting people through tech platforms and then you're serving their needs as such. So 2 of our largest bets, if you will, from the last fund, I'm saying last fund because there's a new fund we are launching right now, are PhonePe, which is actually at the cutting edge of the UPI transactions. The second is UB, which is actually building something which is absolutely new in the financial ecosystem. It's a co-lending platform, a co-lending switch, right? How do you enable a large number of lenders who originate to fill in their actually balance sheet as well, right? So that's the co-lending platform that they run. And in the last financial year, they had 3.5 billion transactions running through their platform. That tells you the scale. And this is a company which is hardly 6 years old, right? Like UPI, there's a huge amount of change. But there's also a thinking which is going through us as investors to see if there is innovation which is truly, truly necessary, right? Or is it innovation which is a feature which is getting added to what already exists? The second will not meet our criteria. We are private equity. We look at investments which are at a slightly higher stage. We look at putting in 100 crore plus money in a company. So for us to have an established business model, to have a company either demonstrating profit or a path to profitability is very important. So the feature kind of innovations doesn't cut the check for us, right? It has to be innovation which is sustainable in an organization. So in that kind of a context where we are looking at, like we're kind of looking at whether there's fresh innovation needed, or is the current innovation needed to actually like settle in different kind of way. Technology makes sense, like tech first financial services makes sense when there is disintermediation. If you look at that, that's not yet happened in the financial services sector. There's a new intermediary who's come in, and that actually like increases your cost of service. It doesn't decrease the cost of service. So what is the innovation in business model which disintermediates or brings down the cost of delivery? That is basically like what we're looking at. We continue to look at financial services from a new fund, which is roughly about like 4,000 crores in size. We will deploy roughly about 2,500 to 3,000 crores in financial services. And much of this will go towards actually like people who are bringing credit close to the last mile. Some of the customers that he spoke about, the next billion. And smaller merchants, who's also, I think, like customers that he serves, right? So, so taking credit there, actually enabling what Rajesh was saying, which is helping people save, right? Helping people actually like transact better. So we are looking at all these innovations, but in the context of ensuring that there is improved margins along the value chain. And that's actually like where we are placing our bets. You could be an innovative distributor, but you have to tell us who you're disintermediating. You could be a manufacturer, and then basically you're building your own direct-to-consumer kind of a distribution channel. So you could be either. We are happy to invest in both. But for us, it is about ensuring that whatever service you deliver, A, it comes with the speed that the consumer requires, B, it comes at an affordable cost. And this is the kind of like, these are the kind of companies that we're looking to fund at this point in time.
Okay, so why don't I change gears and ask a slightly different question. And let me start, Shashank, with you, and Rajesh, if you can go after that. In the financial services world, I'm now taking everything, as you said, saving, insurance, credit, transactions, right? Fintech player versus incumbent, or fintech player plus incumbent, right? How do you think of it? Collaboration versus competition. What's working, what's not? And keep it brief, but Shashank, one or two things that you think hold this collaboration back. And what's the challenge? What can we do?
See, I think the fintech ecosystem cannot exist without banks. So, I don't think they can be at odds with each other, right? I like to think of the collaboration that, the banks are building the infrastructure for the country. So I have this vivid image in my mind that, the banks are the ones which are laying down the railroads for the country, right? How do you go from, from Delhi to Mumbai or Mumbai to Bangalore? But the last mile connectivity, whether you go from the station to your home, right, via Mercedes or a auto rickshaw or on foot or whatever, right, whatever mechanism that is there, that last mile connectivity is where fintechs can really do a great job in terms of, and it goes for different aspects, whether it's personalization, whether it's the last mile, delivery mechanism that is there, or whether it's the, user experience or the friendliness in terms of giving that service to the customer, right? So that last mile connectivity is where fintechs play an amazing role, and they can do it at a faster pace, at a cheaper cost, and with much higher risk threshold, right? So you can look at it from a country perspective that you get to experiment with a lot of diverse models that is very difficult for incumbent banks to think and do, because DNA-wise they are not set up like that, right? And that is where, when that collaboration that is able to happen between the banks and the fintechs in a trusted environment, where the banks are able to empower fintechs to provide those kind of services and experiment on those models, I think we see that collaboration thrive. I think in payments ecosystem is a great example of the growth of UPI, which wouldn't have been possible without the collaboration between the regulator, NPCI, banks, as well as all the fintechs that are there in the industry.
So while I agree, for the kind of services that you and Sabyasachi offer, yes. But if I like some other fintechs who are into credit, who will get into savings, you will actually start seeing more challenges, right?
Absolutely not. It's not at all true, right? I mean, Rajesh, you could go ahead, but I'm just saying that,
The question I have is, will banks willingly say, yes, we can't do this and let somebody else do this. And Rajesh, why don't you share your thoughts on what's true, what's helping, what's holding it back?
Yeah, so we did an in-depth study last year. How much time does it take for, I'll take an analogy of how much time does it take for a guy to finally propose to the girl. 18 months. Again, this is about fintech and bank, not about the boy and the girl. 18 months. We had extensive discussion with a lot of fintechs. So with due regard to both of them who are established large fintechs. So, if Shashank walks into the room of an MD of a bank, they're like, oh yeah, how are you, Shashank? Because you're Razorpay. Don't mind. But in the room, if there is an early stage startup who's bootstrapped or angel, they will, as we do in traditional Indian settings, have to find an uncle or a VC investor or an angel investor to introduce them to some AGM of one bank who will keep on, fooling around. Don't mind. This is what happened. So average is 18 months. Now, does it work? No. The interesting thing is we had a meeting with 20 largest banks. All of them said, no, everything is broken, we want you to fix it. So you're like, we can become a marriage bureau, so to say. But having said that, the fact is they cannot live without each other. Banks do realize they need the agility, and as Shashank said, of fintechs for last mile reach, the new age thinking, but they have their own set of challenges in terms of procuring a fintech, in terms of governance, in terms of the future of the fintech, and fintechs have this challenge of, plugging into 20 banks for even a POC. But the fact remains, I think we are getting there, we are fixing it. I don't want to make it about ourselves. We do what we call as if in this room you guys don't mind a speed dating event for banks and fintechs. So, and everybody, one founder told us it would have taken them 20 months to meet 20 banks, and under the roof in 2 hours he met 20 banks. I'm quoting. So we are trying to accelerate, things are changing, attitude of both banks and fintechs are changing.
So you're going to create a fintech marriage bureau?
Yeah. Honestly, there are grand plans.
I'm not even checking with Anuradha, I'm happy to invest in that.
Okay, thanks.
So, why don't I, I'm looking at the, sorry.
Can I just add one point in there?
Go ahead.
There are, 33 scheduled commercial banks. There are 12 SFBs in India. There are 140 crore people. Look at banking penetration, right? There are cooperative banks, there are RRBs as well. But many of us today don't actually speak about them in the same breath that we speak about banking, right? So in that, and then there are 9,000 NBFCs who banks actually rely on to transmit credit to the last mile, right? And then there are fintechs who are actually where I think there was a recent release which said Amazon ICICI credit cards are 400 million, have gotten 400 million users. So look at the scale at which things are changing and the partnerships which are happening across the ecosystem. Till about 3 years ago, they were distinct ecosystems of lending separately, payments separately, or people were looking at how do we collaborate. Now it is a part, just as banks and NBFCs have worked together for many years, so are fintechs and banks working together now for a few years at least, right? And this is a kind of, trend that we see going forward as well, because you do need different kinds of distribution elements, the agility that is actually required.
So one last thing, and I'm going to try and make this like at Coffee with Karan, the rapid fire, right? So if I can ask, Sabyasachi, if you can start, two questions. One, if you had the crystal ball, one thing that you see completely wacky by 2030, or maybe 2027 if you want to make it faster. And the second one is if you had the wish list, if you could ask for anything, and I'm not even saying from a regulatory perspective, from the regulator, from the customer, whatever, what would that be? So
I'll take the second one first because that's a little close to my heart. If the fintechs can get paid better by the banks, I'm speaking on behalf of all the fintechs in the room. Probably the bankers in the room may not like me for that, but I think that's the reality because it requires huge amount of investment when you ideate a novel idea. You need years together to invest on that idea to become really something that will be
Rapid fire.
Yeah. So that's the first one.
Sure.
And the second one is, as I said, beginning, the fraud and governance will take shape. And I think by 2027, that will really disrupt.
So whatever fraud I want to commit till 27, I'm safe. Rajesh ji?
I'll answer one of them. My wish list is Indian capital, family offices, invest in fintechs and actually reap the benefits. You may sound like a Swadeshi, but the wealth remains in the country so as to create a multiplier effect.
I think my wish list will be that how can we have million technical entrepreneurs in the country? How can we enable everyone to start a very easy, simple business which has some amount of tech enablement and tech skilling? I think it will create amazing value for the ecosystem.
My dream is a bank in everybody's pocket, right? As in true banking penetration across all strata of society, democratic banking. That's one. And the second, the outside kind of like, like you asked for what is something which is completely wacky. It's also actually like a fairly formalized economy. It's not in technology, it's not in fintech, but if you look at it's currently India's 90% informal economy, right? So I want that to be more formal so that, there's true change and the value across chains can be captured well.
Since I asked that, I will end my wish list or my dream. Let me start with my dream. I think, Rajesh, you mentioned savings disruption or whatever, innovation. I look at this and ask the question, why should there ever be a savings bank account? There is no reason for it to exist. With technology, I can invest my money wherever, in equity, in mutual funds, in debt funds, whatever. And if I had, with all that is possible, if I could actually withdraw that money and transfer it and pay at a T+0 now, why do I need a savings account? So I actually look at this and say that my wacky idea is savings accounts, 0 by 2030. So I'm saying that's the dream, if I call it that. It's possible. Technically, conceptually, it's possible. Practically, obviously, there is many a slip between the cup and the lip. With that, why don't I stop and say, maybe take one or two questions from the audience if there's anything coming up for people on the panel. I'm told that we don't have the time for questions, so I'm going to unfortunately bring this to a close and say thank you very much for sharing your thoughts, and hopefully if there are questions, as she had said previously as well, please share that with the team here. We'll figure out how to get the panelists to at least try and respond to that later. Thank you. Thank you very much.